and gentlemen, good day and welcome to the Q3 FY24 post-results conference call of Welspun Living, hosted by Elara Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Prerna Jhunjhunwala from Elara Securities. Thank you, and over to you, ma'am.
Thank you, Michelle. Good evening, everyone. On behalf of Elara Securities, I would now like to welcome you all to Q3 and 9-month FY24 post-result conference call of Welspun Living Limited. Today we have with us the senior management of the company, including Ms. Dipali Goenka, Managing Director and CEO, Mr. Sanjay Gupta, Chief Financial Officer, and Mr. Salil Baba, Group Investor Relations Head. I would now like to hand over the call to Mr. Salil Baba for initial remarks, post which we can start the Q&A session. Thank you, and over to you, Salil.
Thank you, Prerna. Good afternoon to all of you. On behalf of Welspun Living Limited, I welcome all of you to the company's Q3 and 9-month FY24 earnings call. As mentioned, along with me, today we have our Managing Director and CEO, Ms. Dipali Goenka, and Mr. Sanjay Gupta, the Chief Financial Officer. We hope you have had a chance to review the investor presentation that we have filed with the exchanges today. It is also available on our website. During today's discussion, we may be making references to this presentation. Kindly take a moment to review the safe harbor statement in our presentation. As usual, we'll start the forum with opening remarks by our leadership team, and then we will open the floor for your questions. Once the call gets over, should you have any further queries that remain unanswered post the earnings call, please feel free to reach out to us. With that, I would now like to hand over the floor to Ms. Dipali Goenka, Managing Director and CEO. Over to you.
Thank you, Salil. Good afternoon, everyone, and thank you for taking the time to join us today for a Q3 FY24 analyst call. I would like to share some perspective on the operating highlights of our performance during the quarter under review, after which Sanjay would share some highlights from our financial matrix. We are pleased to share that the growth in revenues that we witnessed in the last 2 quarters continued in quarter 3 as well, and we clocked the highest ever quarterly revenues of 2,454 crores, growing by 29% year-on-year. The relatively better holiday season, sales in US have led to improved buying from major retailers. We continue to have sustained EBITDA, achieving 382 crores, clocking 15.6% in Q3, growing at 67% Y-on-Y. Annualized ROCE has also improved substantially to 14.5% from 5.7% last year. India continues to be the leading supplier of terry towels and bed sheets to USA, and as per the UTEXA data, India strengthened its position and its market share in exports to US for the April-November 2023 period, both in terry towels from 41% to 44% and in bed sheets from 49% to 59%. In value terms, though the overall export to US during this period saw a degrowth of 9% and 11% in terry towels and bed sheets, Welspun Living Limited, however, witnessed a growth of 14% and 30% respectively, solidifying our leadership in U.S. export further. In geopolitical front, due to the Red Sea issues, we are seeing increased blank sailing of ships leading to enhanced turnaround time and hardening of container costs for U.S. East Coast and Europe. We're keeping a close watch on this dynamic situation to ensure minimum disruption to the revenues and costs in Q4 and in the next financial year. Consequently, we continue to be cautiously optimistic of the operating performance for Q4. We are committed towards meeting our directed revenue growth of 12% for the year and 15% EBITDA, and shall be topping this guidance by achieving revenue growth around 15% in FY 2024. I would like to shed some light on the shades and updates for major business segments, starting with the export markets. U.S. GDP continued to strengthen in Q3 with a growth rate of 3.3%, much better than anticipated. Consumer inflation has fallen to 3.4% in December 2023 from a peak of 9.1% in June 2022, which was the highest inflation rate in U.S. since the early 1980s. Retail sales has also continued to show resilience in Q3, growing every month, witnessing a growth of 5.6% Y-on-Y in December 23. With a relatively good holiday season and consistent demand, we witnessed sustained inflow of orders during the quarter. Export revenues for Welspun saw a growth of 36% Y-on-Y. Despite global challenges, the Indian market remains resilient with an expected GDP growth rate of 7.3% and 5.6% inflation in Q3. However, the farm sector grew modestly at 1.2% and private spending close to 3.1%. This resulted in subdued retail sales remaining flat to slightly negative in Q3, especially in the discretionary categories due to inflation volatility, though the premium segments performed slightly better than expected during the festive season. Despite the challenging market scenario, Welspun's domestic consumer business achieved its highest quarterly results in the festive Q3 of 171 crores, up by 10% Y-on-Y and 20% Q-on-Q. Brand Welspun continues to strengthen its leadership position and is the most widely distributed home textile brand in the country, with the presence in 600 plus towns and 17,006 plus outlets, up by 1,495 in Q3. A reach not hitherto achieved by any home textile player in India. Brand recall for Spaces and Welspun has jumped substantially to 80% from 72% and 50% from 40% respectively for a target audience, thereby leading in premium and mass home textile category. Brand Welspun like-to-like productivity growth has witnessed a healthy 7% Y-on-Y growth in Q3, contributing to an overall growth of 16% Y-on-Y. Brand Spaces has outgrown the category in the modern trade channel, emerging as a leading brand within the category and gaining market share. We have solidified a presence with 9 EBOs, FOFOs, added in Q3, leading to a total of 20 EBOs on a journey to 150 plus EBOs by 2025. The home textile consumer business continued with its streak of positive EBITDA in Q3. We remain committed to continued investment in our brands for improving brand visibility and salience as a focus to build profitable business growth in the domestic consumer business. Our emerging businesses of domestic consumer business, global brand, advanced textile and flooring businesses grew 21% in Q3. Our licensed brands like Martha Stewart, Creative Collab and Disney continued its growth journey and grew 29% Y-on-Y. Licensed brands have given us an edge in US and European markets by opening up newer avenues. In flooring businesses, we have witnessed big ticket orders from USA, UK and Middle East. We have improved prominence through repeat orders in soft flooring with increasing demand for printed wall-to-wall and carpet tiles in hospitality and commercial segments, as well as valued-added products in hard flooring. On domestic market front, we continue to see growth in hospitality and residential segments in all our key markets. In order to capitalize on market opportunities, we are working on indigenization of a complete value chain. Overall, our flooring plant reached a capacity utilization of 60% during the quarter, with highest ever quarterly revenues of 246 crores, growing by 46% Y-on-Y. The advanced textile business witnessed a 39% growth Y-on-Y in Q3. We have increased the capacity utilization of our new Telangana facility to 65% during the quarter. We have seen the highest sales of spunlace during the quarter while making inroads into the newer customers for needle punch. In wet wipes and sheet mask as well, we have developed newer products for marquee customers. In line with our growth strategy and getting into near complementing businesses, we are glad to inform that the company's board has approved capital expenditure to set up additional jacquard towel facility in a brownfield investment of 326 crores at the existing Anjar facility. It will increase our total towel capacity by 6,400 metric tons per annum to 96,400 metric tons per annum and would be operational by Q3 2024-2025. This augmentation in the capacity will help in expanding our range to fashion and beach towels and at the same time benefiting from China Plus One opportunity. A full capacity utilization, it will have a revenue of 400 crores per annum. The board has also approved an investment of $12.5 million, 104 crores INR, to set up a fully automated pillow manufacturing unit at Ohio, USA, with a capacity of 6.7 million pillows, and the same would be operational by Q2 2024-2025. This shall help us in expanding our product basket and tapping into onshore opportunities nearer to our customers. It will give us an additional revenue of $50 million, 415 crores at capacity utilization. As per a prudent capital allocation policy, all these investments would give us an average ROCE in excess of 20%. ESG is embedded in every aspect of operations at Welspun, keeping us ahead of our peers globally in sustainable practices. Welspun Living Limited, becoming a member of United Nations body UNGC, United Nations Global Compact, promoting environment and socially conscious business practices, is a step towards confirming the same. We also released our annual sustainability report highlighting our performance in our focus areas for ESG, fully audited and assured by one of the Big Four. We are glad to inform that the company has achieved the Best Managed Company Award 2023 from Deloitte, second year in a row. It's a testament to the strategic direction that the company has embarked upon for its sustained profitable growth, and it reaffirms Welspun Living's continued focus on growth, innovation, and business excellence with highest level of good governance practices. With this, I would now like to hand over to Sanjay, who will take you through the financial highlights. Thank you.
Thank you, Dipali, and greetings everyone. I'll give a brief overview of the financial numbers for quarter 3 24 before we open for Q&A. During quarter 3, we reported revenues of 2,450 crore, up 28.9% year-on-year, and for 9 months of financial year 24, revenue is at 7,200 crore, up by 19.7% year-on-year. EBITDA margin for quarter 3 stood at 382 crore rupees, that is 15.6%, up by 67% year-on-year, that is by 356 basis points. For 9 months of financial year 24, EBITDA is at 1,115 crore, that is at 15.5% margin, up by 101.3% year-on-year, that is 626 basis points. The company has been able to maintain consistent profitability, and it reflects the work that the company has done across all operating areas, be it higher orders leading to high capacity utilization, cost rationalization, or value engineering. Profit after tax, after minority interest for the quarter is at 177 crore, vis-a-vis 42 crore year-on-year, increasing by more than 5 times. For 9 months of financial year 24, PAT is at 535 crore versus 73 crore last year, up by more than 7 times. Consequently, our consolidated EPS for quarter 3 stood at 1.84 rupees as compared to 0.43 rupees last year. For 9 months, it is at 5.54 rupees as compared to 0.74 last year. On the forex front, our average exchange realization for the US dollar during quarter 3 was 83.80 rupees as compared to 79.80 in the corresponding quarter last year. At the end of quarter 3, net debt stood at 1,542 crore, which is 367 crore lower than 1,909 crore a year ago and lower by 30 crore from last quarter. Slight inventory built up in quarter 3 would be rationalized by quarter 4 and would bring down the net debt further by quarter 4 end. Coming to segmental results, quarter 3 core business home textile revenues stood at 2,251 crore versus 1,758 crore in quarter 3 last year, up by 28.1% year-on-year. For 9 months, financial year 24, revenue of core business stood at 6,641 crore, up by 18.2% year-on-year. Quarter 3 EBITDA of home textiles stood at 347 crore at 15.3% as compared to 11.7% last year. For 9 months, EBITDA of home textiles stood at 1,019 crore at 15.3%, up by 635 basis points year-on-year. During quarter 3/24, revenues from flooring business was 246 crore, up by 46%, and EBITDA was at 20 crore, which is 8.1% as compared to 1.8% last year. For 9 months, flooring revenue is at 714 crore, up by 44%. EBITDA was 58 crore at the margin of 8.2%, up by 628 basis points. In 9 months, financial year 24, we have spent 230 crore towards capex, mainly towards the setup of 30 megawatt solar power plant at our Anjar facility. As earlier mentioned by Dipali, the board of directors have in their meeting today approved capex investment totaling to about 430 crore rupees to set up a new tile capacity of 6,400 metric ton per annum at Anjar, and to set up a pillow manufacturing facility with a capacity of 6.7 million at Ohio, USA. The projects will be financed 75% through term loans and 25% through internal approvals. Most of these capex would be incurred in financial year 24-25. In line with our capital allocation policy, both these investments would give us average ROCE of more than 20%. With this, I leave the floor open for question and answer. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may please press star and 1 to ask questions. We'll take the first question from the line of Prerna Jhunjhunwala from Elara Securities. Please go ahead. Prerna, I have unmuted your line. Kindly proceed.
Yeah, hi. Am I audible now?
Yes, you are.
Yeah. Congratulations on a strong set of numbers. Just wanted to understand the demand scenario. How is it panning out in the U.S. For the next 2 quarters? Whether Red Sea attacks are having an impact on the order inflow, or they're trying to increase the order, prepone the orders for the company. So just wanted to understand how the customers behaving in the current geopolitical situation.
Thank you, Prerna, and very interesting question. So first of all, I must tell you, I have always maintained, and we have at Welspun always maintained, that USA is a resilient economy. And today, even if you look at it, quarter 4 is at 3.3% as GDP growth. Inflation also remains about the same. Interest rates, are steady at around 5.25%. So, we are looking and that the Fed, the rates are cuts are expected in 2024. So the markets in the holiday season have been up. It has been it grew by 3.8% Y&Y, and the retailers are pretty confident about the markets as we go forward as well. However, the Red Sea definitely is an aberration, but must say that there are opportunities, and we are looking at the risk of mitigating the Red Sea. Retailers are looking at, it might take, the whole 2 to 3 weeks extra. So people are planning ahead, or we are looking at innovative ways for mitigating the turnaround times as well, Prerna. There's a lot of things that we are doing along with, our customer partners as well. So over and all, I must tell you about Red Sea that, it'll be, we'll be mitigating and make it minimal cost impact overall.
Okay. But there is no rush from the retailers is what we are trying to understand to gain, because to mitigate this 2-week delivery delay.
So, here, Prerna, I must tell you, we are working very closely with our customers. You already know that we have our supply chain analysts who work in the geographies there. So, we are looking at our warehouses where we can stock in USA as well. So, and those are the opportunities we are looking at in pockets. So, definitely, it will be very need-based, curated according to the retailer's demand. But I just want to again maintain that the minimum impact of Red Sea will be there. So, I just want to put that forward to you.
Okay, understood. And ma'am, second question is on the domestic market. You mentioned that consumer discretionary demand has been weak, and we witness this across product categories and other retail results as well. So, does it change your target for near-term, mid-term for growth in the domestic market?
So, Prerna, now let me give you a perspective of retail. First of all, we are not going to change any of our targets because this is all a kind of an interim blip. So, the rural market has been, very modestly grown at around 1.2%, and a personal consumption is at around 3%. When you look at India's GDP growth at around 7.3%, that's come in with the kind of investments in energy sectors, infrastructure, that has actually contributed to that, right? But if I look at the consumer indexes, they have been a little low. However, the premium products have continued to be stronger here. But I can just tell you that this is all a blip, and everybody will be looking at how the elections pan out, and we will definitely see an upside. This could be absolutely a blip here. And I can also maintain one thing here. Welspun's plan on the retail segment remains intact.
Great, ma'am. Thank you for answering this question. I'll come back to the question queue for any further questions.
Thank you, Prerna.
Thank you. A reminder to all the participants that they may press star and 1 to ask questions. The next question is from the line of Monish Ghodke from HDFC AMC. Please go ahead.
Hello. Yeah, thank you for the opportunity. So my first question is, what would be our split between CIF and FOB contracts in home textile?
So, yeah, FOB is around 80% of our top line, yeah.
Okay, so there won't be much impact of this Red Sea disruption in our freight costs, right?
Absolutely, Manish, and that's what I'm maintaining. And the rest also, we are looking at minimum mitigation, a minimum impact on anything. So, yes.
So the warehouses which we have in the US, how does it work? Are those maintained for CIF orders or those are also FOB orders?
No, they are maintained for the domestic orders and CIF. Let me be very, very clear on that. So we have 3 warehouses, and that helps to get our customers, service them better in any kind of aberrations as well.
Okay. So what would be the typical freight cost in CIF contracts?
So it went down to about $2,000, and it's currently in open market is hovering at around 5,000. But because of our contracts, we are not paying that much. So about $2,000 to $3,000 per container.
Could you explain in percentage of sales terms?
It's about 1.5%.
Okay. And so this inventory of 90 days which we have in general, what is the breakup between RM and finished goods?
We don't give out that information, but it would be, any business which has a breakup of RM and finished goods, we have the same breakup.
Okay.
Yeah.
And so this utilization ratio, so our utilization for towel has improved, but the bedsheet utilization appears weak. So is there any reason as to, why bedsheets is yet to pick up?
No, Manish, it is a reason for the market demand quarter on quarter. If I can say that this year, we'll end up as a demand 80% utilization for towels, 70% utilization for sheets, and 60% for flooring. So this is what we are looking at, Manish.
Okay. Thank you.
Thank you.
Thank you. Participants who wishes to ask questions may please press star and 1 now. The next question is from the line of Hemang from Anvil Research. Please go ahead.
Yeah, ma'am. Earlier we were targeting to have a very low amount of capex for next one or 2 years, and we want to become a debt-free. So have we changed our stance, or this investment is a one-off?
Yeah, sure. Over to you, Sanjay.
Yeah, Hemang. So no, our target for becoming debt-free in 2 years' time remains intact. These are strategic investment which will help us in meeting our medium-term objectives that we have outlined for us for financial year 26, and hence these are building up our product range and portfolio, which will help us in getting there.
So let me tell you, Hemang, here one more thing here. Like, this actually gives us an opportunity to improve our share of shelves with our fashion towels and our beach towels. And along with that, this gives us, a better UVR, and also the China Plus One is an opportunity here too. So let me just say that. With this, I must also share the prudence of ROCE has been maintained at 20% here. Now, even whether that's for the pillow project that we have in America, that actually is closer to our customers' needs, and it is a very big demand after towels, and is a great opportunity that we feel.
Yeah, that's great. And ma'am, on the flooring side, are we on track, or so whatever the assumptions what we are having, we are delivering on that line, or we are still sort of whatever the internal assumptions or expectation of the business is?
We continue to grow here. You must have seen our growth of flooring of say over 40% here. Highest growth that you've seen in this quarter. Right. So definitely, Hemang, that is on track. And in fact, our EBITDA will be better from the next year onwards as we indigenize the supply chain and as we curate our businesses better and better going forward.
Okay, and flooring doesn't require any further capex for this indigenizing?
No, general capex may be required of 50 to 100 crore for balancing or maintenance, but no, nothing more than that.
And the last question, how much saving we will incur from the solar power plant, what we had come in, I think that 30 megawatt?
So 30 megawatt solar plant, solar generally comes at a price of about 4 rupees to 4 rupees 5 paisa per unit against, current price of 8.5 rupees for thermal plant. So about 50% saving.
Okay, that's great. Okay, that's great. And all the best for the future.
Thank you.
Thank you. The next question is from the line of Biplab Debarma from Antique Stock Broking. Please go ahead.
Good afternoon, ma'am. My first question is on the margins. Good margins, decent side of margins. So if we assume the cotton price remains stable, right, 55,000 kind of per candy kind of price, and assume that there is no escalation in freight cost, what kind of margin shall we see as capacity utilization goes up? Just trying to understand that is there a headroom for margin to go up, say, from 15% to 20% in the next 2 years?
Hi, Vipul. So we would try to maintain our margin rates that we are currently doing. Keeping into mind that cotton is remaining at the same level this year and the next year. Other than that, we are not giving any guidance on a higher EBITDA or a lower EBITDA. We'll try to maintain the EBITDA that we are currently doing.
And you know that the global dynamics are still geopolitical scenarios continue to be there. So we want to maintain the numbers that we're committing here.
Okay. And second question is in terms of, because you have various sub-segments in your business. You have advanced textile, domestic, and export brand and all. So in terms of, attractiveness, which are the segments are you witnessing significant growth, or you are very optimistic? You have a very optimistic outlook.
So here I can just tell you one thing, Biplav. Here Welspun is working on getting the share of shelf around the globe. So if I can talk about our licensed brands like Martha, that the additional share of shelf apart from towel and sheets gets better. Into the discounters, we are not only doing towel and sheets, we are doing bedding, utility bedding, we are doing flannel. And when we talk about Disney in UK and Europe, that gives us additional share of shelf with different retailers. So, the opportunities are everywhere. For the domestic market, we already know that we are the highest distributed brand right now in the country. And we know that the consumption and the amount of housing opportunities that we are seeing in this country are immense. So definitely that again becomes a very big deal. When we are seeing our brand Christie, which makes the Wimbledon towels, which again is becoming a very important D2C play at a brand in UK and also now growing globally as well. So I can say that all of it is made according to the needs of the market needs. Advanced textile primarily is very commodity driven, but however, our brand is going to be launched in wet wipes in India as well, and which will definitely be available for the consumers as well.
So Biplav, to continue it further, all these emerging businesses, their share of total revenue is going up steadily. So we have reached about 30 to 33%, and we are seeking to take them to 45% of our total revenue. So all these businesses will continue to grow in excess of 20 to 25% over the next 2 to 3 years.
Okay. And my final question is on the capex that you announced. One is the brownfield and one in Ohio. From when you will commence this capex?
So Ohio will be commenced by Q2 and Anjar by Q3.
Okay. Thank you, ma'am. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Sanika Khemnani from Middleton Capital Advisors. Please go ahead.
Hi, am I audible?
Ma'am, little bit low. Your audio is little bit low. I would request you to increase the volume a little bit, please.
Is it fine now?
Yes, ma'am. Please proceed.
Yeah, if I'm not wrong, in the opening commentary, we said that we are getting a growth rate of 15% this year, right? We are targeting a growth rate of 15%.
Correct.
So that means we are going to see a degrowth on a quarter-on-quarter basis.
No. So we have grown till about 19% till 9 months, and we are giving a direction of minimum 15% growth by the year. Yeah. So there will be no degrowth in quarter. Yeah.
But we have grown 19% in 9 months.
Yes. So we are not giving any direction for quarter 4, but we can say quarter 4 will not be a degrowth, and for the year will grow minimum 15% plus.
Okay. And can we expect to continue this kind of momentum next year as well?
Next year, yes, we will continue this momentum, keeping all things constant.
So we are looking at our commitments to be towards the 15,000 crores in 2026. We maintain that number, and we will continue to look at maintaining our commitments that we have given to the market.
Okay, and also just one last question. What kind of capacity utilizations are we looking at for the Ohio and Anwar facility in terms of the new capacity which is coming in for pillars and...
Yeah, so any project which ramps up, so it starts with about 50-60%, then reaches say 70-80, then 90%. So similarly, the ramp up would happen in both these projects in a similar manner. And we have given that at full capacity utilization, both these plants would give above 400 crore turnover each.
Yes, and so I was actually trying to figure out when are we going to reach the peak capacity utilization?
I think in the second year itself.
Second year itself, because these are all very thought through investments, and they already are made with the commitments that we have around with our customer partners.
Okay, so second year basically is FY26 or FY27?
Yes, yeah. FY26.
Okay. Thank you so much.
Thank you. Participants who wishes to ask questions may please press star and 1 now. The next question is from the line of Iqbal Khan from Nuvama. Please go ahead.
Yeah, hi. Am I audible?
Yes. Iqbal.
Yeah, hi. So I just have one question. Totally, congratulations for a very strong result. One question, you just mentioned that you are expecting a 15% Y&Y growth for the FY24, and you mentioned that around 15,000 crore is your target by 2026. So if I put this number in, it is translating into a CAGR of 27% over FY24. So just wanted to understand, what segment are you targeting to have such kind of growth by FY26?
So Iqbal, as I mentioned, so all our emerging businesses of flooring, advanced textile, global brands and domestic business will continue to grow in excess of 25% over the next 2 to 3 years. And our core business will continue to grow in double digit, if not higher. So all this will give us, will help us in reaching our target. We are quite, we know and we acknowledge that it's a steep one, but we are setting up these projects that will help us in reaching there, and we will make all the effort to reach there by.
And these numbers are actually thought through, and we are maintaining this. There are opportunities for inorganic growth as well that will come our way in the terms of brand. As a journey, from B2B to B2C is also already on. So yes, there are those opportunities that will also come, and we'll continue to explore them as well.
Thank you, ma'am. And just one more question. Could you please also provide your CAPEX guidance for the next 2 to 3 years?
So for next year, we have already given the guidance, 430 crore plus another 200 crore for maintenance. And then from year after that, 200 crore each year.
All right. Thank you, sir. Thank you. I'll stand in the queue for any further questions. Thank you so much.
Thank you. Participants, you may press star and 1 to ask questions. The next question is from the line of Prerna Junjunwala from Elara Securities. Please go ahead.
Hello.
Yeah,
hi. I wanted to understand this Ohio investment that you are planning with respect to the cost structure against India and what kind of margin profile that that facility would have.
Those are very detailed answers to this, so we can take it up offline. However, we have already mentioned that the ROC for the project in excess of 20%, and we will not get into any project which is not margin accretive. So you can take that it's a margin accretive as well as ROC accretive.
So it will be having better margin than normal our home textile business.
Correct.
Okay. Yeah. Okay. And any cost advantage that Ohio has against India?
So I'll tell you, Prerna, one thing I must tell you, this is a bulky product. So this gives us an opportunity to be near the market. Like here, we'll be shipping air from here if we export from India, right? Okay. So it's better to, those compressed pillows don't work in America. So this is something closer to the, and just in time for our customers as well. And that makes a huge advantage for us. Okay. And as I said, the volumes are equivalent to towels.
Oh, okay.
And it's a fully automated plant. So the number of people required to work is very less as compared to India.
It needs lesser people looking at IEs to work out these systems, completely automated, state-of-art of plant as well.
So this is helpful. The employee cost is not a concern, and even logistics cost is beneficial. So this makes
absolutely.
Yeah,
absolutely. That's kept in mind.
Yeah. Okay. And second question is on your cotton. How much of cotton inventory in terms of months you would have today?
So as per our policy of buying in the cotton season, we are continuing to do that, and currently we have in stock about 6+ months. Plus we have some forward positions, so we are quite comfortable with that.
Okay, understood. Thank you.
Thank you. Yeah. Thank you. Before we take the next question, a reminder to all the participants that you may please press star and 1 to ask questions. The next question is from the line of Biplab Debarma from Antique Stock Broking. Please go ahead.
Sanjay sir, can you repeat the capex plan for FY25-26?
FY25-26 will be about 200 to 300 crore. It's just a maintenance capex.
That's all. Because you were mentioning some 4.3 billion for next 3 years capex.
Okay. No. So next year, 24-25 will be 430 crore that we have just mentioned, plus about 200 crore for maintenance, so about 630. Next year after that will be 200 to 300 crore for maintenance.
Okay, so this capex 4.3 billion and 2 billion plus 2 billion in this capex would ensure your growth FY26 revenue of 150 billion. Is that correct, or you need to put more capex to achieve that revenue of 150 billion by FY26?
So Biplav, here we will take on some calls of, here this is the opportunity for us to grow our brands. So while one aspect is your core business, and we are looking at 2026, where our emerging businesses will be around 45% of our portfolio. So you can imagine, and that's where the opportunity is going towards the consumer, opportunities to look at brands, and that is also an opportunity there. So there is something which could be complementing categories. So Biplav, we will keep that open. The number is intact, and we are going to achieve it.
Okay, so FY26 number of 150 billion is what is the target?
as of now, this is the capex plan, and going forward, you will evaluate whether to do more capex or use ancillary facilities or other permutation combination. Is my understanding correct? Yes.
Absolutely.
Okay. Thank you, ma'am. That's a strong growth guidance for FY20.
Thank you.
All the best, ma'am.
Thank you.
Thank you. We'll take the next question from the line of Prerna Jhunjhunwala from Elara Securities. Please go ahead.
Hi. Just one more question from my end. Saw some articles on launch of Christie in the US. Could you please highlight some of your plans related to Christie, where do you foresee the brand to reach, and what all geographies you would like to cover? Some insights would be helpful on Christie.
Thank you, Prerna. I must tell you that Christie has been growing quite positively, even in these current markets and dynamics in UK. It has been recognized as one of the great brands in UK as well. Must tell you that Middle East continues to grow by 25%. USA and Canada are the next stops that we're looking at. Specifically, first Canada, where we are looking at offline development. USA could be an online plan that we're looking at. Then we are also looking at China, Japan, and New Zealand and Australia. And the opportunity that I see with Christie is also to be launching in India very soon, because it also covers our luxury segment as we go forward next year.
That's fantastic. Thank you. Thank you for this answer. This is helpful.
Thank you. Thank you, Prerna.
Thank you. Ladies and gentlemen, that was the last question for today. I will now hand the conference over to Ms. Dipali Goenka, Managing Director and CEO, for her closing remarks. Over to you, ma'am.
Thank you, Michelle. So, we are glad to see continued growth in all our businesses in Q3, setting up new landmarks by reaching highest Q3 revenues in home textiles and highest ever revenues in domestic and flooring businesses, leading to increased market share in all areas of operations. Our ability to provide solutions along with innovation and unmatched quality to our marquee customers reinstates our position of being the FMCG of textiles. We continue to have greater focus on the India market with deeper penetration in retail segment through increased EBOs and MBOs and higher brand visibility of hence reinstating Har Ghar Se Har Dil Tak Welspun. Domestic flooring is reaching newer heights, and overall flooring business has continued its profitable growth during the quarter. Our robust strategy, sustainable growth, and high level of governance has resulted in us getting the Best Managed Company Award 2023, second in a row. We also continue to set up higher standards in our ESG leadership with complete visibility of our practices through audited sustainability report. Further, through our increase in our TT capacity and setting up a pillow plant in USA to enter into new product areas, we are also striving to reach our stated revenue objectives of 2026 with consistent profitability to ensure a healthy ROCE to create substantial value for our stakeholders. Thank you.
Thank you, members of the management. On behalf of Elara Securities, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.